Good evening, everybody. Hope everybody's having a nice winter evening. Got 31 degrees here in Pittsburgh and freezy slushy. This is where the visual analysis of candlesticks helps you make a lot more correct assessments of what the market's doing. And as long as we use the signals and the T-line, we can pretty much see what's going on in investor sentiment. And right now, obviously, investor sentiment is not dramatically bullish and it's not dramatically bearish. It's just kind of in a sideways mode. So is that a good assessment to make, or how do you use that to your advantage? Basically, if you know which way the market is moving or not moving, now you can do or have your portfolio in the right positioning mode. As far as right here, you'd probably be long. Right here, you'd probably be going short. So right now, this market is telling us it's not going up and really not going down. We're probably in a wedge formation. So it's probably going to be in kind of just a waffling mode here for a while. Yes, looks like a wedge setup in progress. The NASDAQ, same scenario. It's just moving sideways. When we start seeing the market move up, move down, move up, move down, and kind of getting a little bit thinner each time, it tells you the markets really don't know which way they want to go at this point. Yeah, let's see. Mike's having no sound. Yep. Okay, yeah. Thank you, Jim. Well, yeah, earnings should help. But right now, with the market moving this way, I think we're still going to be very sector specific as far as which way this market is going. All right. See if there's anything I'm supposed to announce. I'll think of it as we're going along. All right. Crude oil, as you can see, is still in a downward. Let's see what's doing after hours. Still in a downward trend. And after hours, it's still trading lower. So are we near a bottom? Right now, there's nothing to show there's any investor sentiment changing at this point. We're still in a downward direction, which is going to make a lot of the oils weaker, which we'll get to here in a little bit. I was short hogs today. Same scenario as crude oil. It just hasn't been able to get back up above the T-line. So and so there were prospects of bullish Haramis here for the last couple of days, but it didn't have one confirming indicator with it. The NASDAQ or the stochastics weren't yet in an oversold condition. So that's where it was more compelling to see a bullish Harami and a positive open today to tell us they were taking it back up, which they didn't. So what we can really, and see, so this is what I was kind of leading up to for tonight, that if we can see patterns, and we know what patterns usually occur, such as a wave 1, bearish J-hook, wave 2 going into wave 3, we can at least be comfortable, or at least have a target to say if this is wave 1, wave 3 should be of that same magnitude. So that's going to hold us into a position a little bit longer, knowing that we probably don't want to get scared out even if we see a little bit of buying on the way down here. It needs to see a change of investor sentiment. Yes, there's nothing right now changing the trend. So at this point, I just stay long. And what's my ultimate? Well, at this point, we're just getting into the oversold area. I probably wouldn't want to see it trade back up above the halfway point of this candle. That would be a little bit scary. So right now, I would just conclude we're still in a downtrend on wave 3. Any waves on crude oil? No, crude oil is just down. Yeah, there's just nothing here to say, well, this could be considered a little counter wave. But nothing here yet. They're still selling off crude oil. See if I have crude oil over here. Apparently not. So, and this is why they've got the old adage that the trend is your friend, and it's even more so when you can see what indicators are working in your favor as far as a downtrend that is staying below the T-line. You just stay short. And so remember, the first target we had a while back was, I think we picked out, or I thought that it could get to the $85 area. And that was based upon a previous wave. Let's see if I can find it, if it was even in this contract. It may have been the previous month's contract, but there was kind of a bearish J-hook pattern that told us that our next move would be down to the $85 area. And then we would see at that point whether it was going to continue lower or not, which it did. So right now, there's still nothing in the crude oil chart that would tell me that the buyers have come in yet. And are you a little bit more sensitive? Yes, you're in the oversold area, but notice how long we've been in an oversold area. For pretty much a month now, or over a month, that the stochastics have been oversold. Okay, let me see what else. Cattle, notice what cattle has done. Failed with doji, right here at the 50. Where do you think the next target is? More than likely down here to the 200-day moving average, which makes this an easy trade tomorrow. If it opens lower, what type of signal do you think you're going to have? Basically a bearish doji sandwich that if this day right here and this day right here is the same, it could almost take you right down to the 200-day moving average in tomorrow's trading. So something to watch to see if that's a good day trade. Let's see what some of our other ones did. Gold was up pretty good today, up 16 bucks, and it's had this little bottom action here. More than likely, there's your next target. Silver. Silver also looking like it had a support level down here and staying above the T-line. Should be in a good uptrend. The bond prices continue to act well. They broke out through this level. You just stay long on bond prices, which means your, the interest rates are continuing to go down. The dollar, staying in a steady uptrend, which means the euro is probably in a steady downtrend. And what are some of the other ones? Whoops. Uh-oh, this thing is getting slow. British pound, looking like it's trying to find a bottom. All right, the yen. The yen's trying to do a bottom in here, but the yen, as we know, has been in a bearish crash. There's that bearish J-hook pattern. Now it looks like it's trying to do a double bottom down here. you could be buying the trend, but I'd probably be more apt to be buying it if it could close back up above the 50-day moving average, which, as we can see, was a resistance level. Okay, I think we've got pretty much everything. Soybeans, just trading predominantly sideways. Wheat, still in a steady downtrend. And notice the reversal, big, huge shooting star, bearish engulfing. You stay short until you see a buy signal. At this point, with it being in the oversold area, where's a logical place to set your stop if you're short? Shouldn't come back up through yesterday's or today's open. This is after hours trading. If it came up through there, that tells you that at least they're going to bounce it. Okay, some of the ones that we've been trading. ADXS, we were buying this one because of the classic pattern. There's your fry pan bottom, there's your slow curve, there's your breakout, and notice how the breakout occurred with a little gap up through kind of the trading range. And now you just trade the rest of the trade as the type of pattern we expect coming out of a strong fry pan bottom, which then resulted in a J-hook pattern. We've been in INSEE. We've had the calls on INSEE for a while, and it's just coming back around to where it's supported right here. And this is why last week I was saying, once you start seeing these inverted hammer type signals, it's going to pretty much tell us which direction we're going to be heading based upon which way they take it. So obviously when they started taking it up, that told us after this indecision that was supporting right on the T line, that this big rounding bottom was still in progress. You continue to hold this one. How do you differentiate between a continuation gap and a gap up in the overbought area? But it's very simple, and I'll get to a few here. I've got that answer in here, short and skinny, so hang on, I'll answer that as we go. I brought some of those charts up specifically for that analysis. ADHD, things that people are following, observe the obvious. A big kind of rounding bottom, lots of indecisive trading. Now the decision's being made. This one I wouldn't be afraid to be buying based upon this little pattern that told us that investor sentiment was building up and starting up again. Let's see. And IQNT we recommended last week, because there's your cup and handle setup. So we closed out the position and we bought back the position because we could see what type of pattern was setting up, this cup and handle. So this is why I say when you see a fry pan bottom and it fails, don't get rid of it, because still the continuation of this pattern is that cup and handle, which is there's your cup and there's your handle, which just usually creates a slingshot effect to the upside. So we're hanging on to this one. Now here's one, this is one we kind of talked about in the chat room today, of what you do when a trade goes bad. Now, are there going to be trades that go bad? And the answer is yes, because we're trading patterns that tell us what the probabilities are, not the guarantees, just the probabilities. But we also know that if we're in an uptrend, the last place we want to see a stock price open is below the previous day's open, and then start trading down. That's our kicker signal. So today I held on to it for a little bit to see if they were going to bring it right back up, but when they started failing, that told us they weren't buying, close out the position. And this led us into the discussion of why I have 10 positions on at any one time. Because if I had this position and it gapped down, which I did have this position, and I had to take a loss, not so much a loss on the overall trade because we started buying in here, so we got back out pretty much even, but we gave up these profits. But this is just one trade out of 10, and I had other trades that were acting well. So what profits I gave up today in this trade, the probability of say that most of my other trades were working in the right direction, so they offset the losses that we took. Would you still buy INSEE? Not necessarily, no. Now it's in the range of where we expect it to be breaking out. It's right now you hold on to INSEE, so you don't buy it here. That's just a hold. On IQNT, we sold probably half the position on this day with the idea that it had bounced off the 50, that it needed to open positive, and then we bought back the other half of that position right in here when it looked like it was starting to close above the T line. The reason for that is not because of this right here. This was part of it, but because of this right here. But this is what was being created. So this is the kind of where I'm slowly evolving back to, that if you identify and know what should happen out of your patterns, that gives you a little bit more insight into what is happening based upon the current price move. So again, this wasn't the stimulus for buying back. This whole thing was the stimulus for buying back, that we were in a cup and handle type setup. Where did you start taking profits with IDRA? Let me see if I've got IDRA on here somewhere. Yeah, I'll get to IDRA. I've got it down here later, so let me get to that one. Now, a lot of people ask, well, if you see something setting up, should you buy it that day? And that's kind of what the situation was with PDCE. Is notice that this closed up here. Let me make this a little bit bigger so we can see it better. The recommendation for this one was to buy it on positive trading today, because that would have been a bullish Harami, almost a bullish Harami. It was a bullish Harami on the other charts. That if they started trading this positive, what type of pattern was setting up? Was setting up our J-hook pattern. The fact that they opened this down here at the previous day's open and started trading it lower pretty much told us we didn't want to be in here, because it wasn't creating the pattern that we expected for it to the pattern that we were expecting it to move. MG, no, this up here is not a the 15-minute. It's delayed by 15 minutes, which means nothing right now because the markets are closed. Can you show me the cup and handle on IQ? What? Too fast? You went too fast with the cursor. Okay, I was way ahead of my. All right, look at this chart. There's your cup, the big rounding bottom, and there's your little handle. And so what happens is, coming out of this cup and handle, this acts like that little slingshot effect or J-hook pattern coming out of a fry pan bottom. So very slowly. There's the cup. There's the handle that goes to the cup. This usually means investor sentiment was building up. It got dashed. Then investor sentiment came right back again. And so this time the bears say, shoot, they're back here again. Get me out of the way. And that starts your next uptrend. In general, do you use a 15-minute for a stock? No, I usually use the 10-minute chart to make my overall decisions. And then once that decision is made, then I'll flip down to the 5-minute chart and the 1-minute chart to actually do the execution. Yes, the fry pan bottom is the actual cup. So it's a fry pan bottom. And what do we expect coming out of a fry pan bottom? A strong price move. But when it fails, we want to be back out of that trade. Then we can also watch to see that this trade is coming right back up again, which means now, instead of this being a failure, not paying attention to it anymore, we want to come back in and get ready for the next move coming out of this cup and handle. Yes, it's safer. So it's just like any J-hook pattern, watching to see what happens when it gets up to the resistance level, or do you buy when it comes up through the resistance level? You probably got a higher probability trade, less profitable, obviously, but a higher probability of being correct. The difference is, in this one, we can see what was happening setting up because of this over here, that we did have a cup and handle in progress. All right, let me see what else we got here. And Netflix. Netflix, last week we were in the option trading room. I had recommended buying the Netflix January put spread, which we bought the 325 puts and sold the 320 puts for a $2 difference, for a $2 net, with the idea that if they close this below 320 this coming Friday, that now has $2 has turned into a $5 price move. That's probably too, John, is that the prices will move back up. So the question is, how far will they take down crude oil? And okay, yes, we are getting to BIDA. BIDA is on here on when to sell. So I'll come to BIDA here in a little bit. And IDRA is also kind of that, there's your fry pan bottom breakout, there's your J-hook pattern. And right now, all you can do with this stock is stay long as it stays above the T-line. Notice what broke it out today. First of all, your Morningstar signal, which is a good bullish signal in an uptrend. Then you have your doji sandwich, and what do we know about a doji sandwich? That's usually illustrating there's going to be more upside. So in IDRA, you just stay long until you see a sell signal. Now, the warning factor is, here's wave 1, and here's wave 3 that is about the same magnitude as wave 1. So you'd be a little bit more diligent. Your stochastics are just climbing into the overbought area. You just be a little bit more diligent as far as watching the sell signal. No, right the curve, I just use this. I use the chart big enough so I can see enough of it. I'm more interested in this right here. This is my decision making, and then this is telling me what's happened in the past. I could make this as big or as small as I want, but being that I'm hard of seeing, I like to see this area first. Then if that's compelling, then I can go back and see what was happening in the rest of the chart, what type of patterns. Hydra stay long, but would not enter here. Pretty much, yes. Remember, just because a stock is doing well doesn't mean it's a buy. It's the reason it's doing well is because there was areas that told us it was time to buy. Even though it was doing well here, it probably wasn't as good a buy. Or if it was doing well here, it's not as good a buy here. So this might go up another 4 points, but this just isn't the place where you want to be buying, because there's too many things now that tell us that the buying area is already come and gone. This is just a hold. Now, there will be times, such as this type of situation, where I wouldn't buy here, wouldn't buy here, wouldn't buy here, but I would buy here or even buy here because I can see what type of pattern has developed and I know what the next wave should be producing for us. Let's see, and we shorted VDSI. Because knowing the simple little patterns and what should happen at the T-line. Now, this I call a rounding top, but you could also call this a head and shoulders. Doesn't matter what you call it, as long as we can see that there's still, Jason, I'll get to VIMC here in a second. That's one of our ones that we recommended last week. But as long as I can see that there are still sell signals, and this closing right here told us there was kind of, you can see that there was kind of a support level, that if they open this lower today, which they did, you could be shorting it, because this is kind of your, like your double doji to the upside, double doji to the downside, or what we call the two methods falling, where they've taken it down, indecisively they've taken it up, and notice the main factor of this. They couldn't get this up above the T line, and your stochastics were still heading down. That pretty much told us that our probabilities were pretty strong that they're still heading in a downward direction. And if they were, that told us that this support level was not going to act as support. So where's our next target? There's a gap here, and there's the 200-day moving average down here. This could get down into the $18 area, which coming from this level makes that a good 6-point move on a $24 price, or about a 33% return. All right, what else we got here? Let's see. I guess we can look at VM. This is one that we recommended a few days ago because of this right here. And notice what broke this out through this level, our doji sandwich. What did we need to see at this point? Needed to see that the 50 was not going to act as resistance. On the other hand, if this had opened lower 2 days ago, we would have taken profits and watched for the bobble, which we'll get to. The bobble is when we see a price move up to a resistance level, such as the 50. So we see in JNUG, let's make this big enough. But there's our buy, there's our bullish engulfing, there's our bullish Harami, there's our double bottom. There's our little kicker type signal. There's our left-right combo. Where's our next target? The 50-day moving average. Obviously, at the 50-day moving average, they were failing. But notice where they pulled back to, right smack dab to the T-line. And then they did a kicker type signal back up through. So that's our what we call a bobble. So you've got two alternatives here. If you start seeing on your 10-minute chart that you're failing at the 50, take profits. You can always buy back, because we don't know when it fails at the 50 whether it's going to continue down, and there was a good possibility of that, because look what your trend has been doing. It's been in a downtrend, and what was it telling us that would be happening here at the 50? If it was acting as resistance, it was just telling us that our downtrend was remaining in progress. We wanted to be out of that trade. The fact that they turned it around and came back up through the 50 now tells us a different story, that this downtrend isn't acting as resistance and the 50 is not acting as resistance, but there's a new dynamic in this one. Let's see. You ignore volume patterns entirely. Up volume better than down volume when it comes to investment decision. Yeah, the only time I really look at volume is at a level or at an area where you might have seen major signals. I don't even know whether do I have volume on here. I don't even have volume on here right now. But volume doesn't mean a whole lot to me unless you see a severe bottoming signal, and on the day of, the day before, or the day after, you see there's been a huge volume spike, which usually indicates there's a lot of change of ownership in that stock, which usually indicates that the weak have sold out to the strong, and they did it in a big way. So the volume only becomes a real major factor to me when, and all it is an added fluff, that if you see big volume at a reversal signal in the oversold area or the overbought area, it tells you there's been a lot of stock changing hands. It usually indicates that's where there's been a change of investor sentiment. Can you please go over how you execute a trade going down from the daily to the 10-minute, 5-minute? Okay, yes. So let's see. Let's see. The one that would have been the big factor would have been on something like ARWR today. That when it got down here, what we had to figure out was, were they going to take it right back up and even take it back up above the T-line, keeping this fry pan bottom type trajectory in place. So doing that, you go to your 10-minute chart. And in this case, the 10-minute chart didn't tell me I was up above the T-line just yet. And to see if I was going to get there. Now, let's say hypothetically, this right here was right on the T-line. It bounced up to the T-line. Then I want to see what my 5-minute chart is telling me. And at that point, if the 10-minute chart had just come up and touched the T-line and the 5-minute chart was still going up through and not coming back to the T-line, that would have given me a good impression that the 10-minute was going to come up through the T-line. And if was this the right time to be buying right here, that's where I flip down to the 1-minute chart. I don't know whether this will work if I can find it. But let's say that time frame was this right here, that the 5-minute chart was showing it's time to buy. And then the 1-minute chart is starting to roll over a little bit, telling me, well, maybe it's not time to get in yet, because if the 1-minute chart is getting soggy, that's going to make my 5-minute chart soggy, and that's going to make the 10-minute chart soggy. Now, on the other hand, if my 1-minute chart had pulled back and then started coming back up into new high, that would have made my 5-minute chart kind of continuing up, which then would have told me my 10-minute chart was going to come up, was continuing to come up through. So when I see something set up, I want to make sure that the 10-minute is going to confirm, and that's the 5-minute will kind of give me a faster view of that. And then to make sure my 5-minute is still confirming, I flip to the 1-minute chart. Let's see. All right. So anyways, man, we're going to be here all night long. We're not even through the first section yet. JNUG was the next one. Whoops. Because it was showing a breakout. Whoops. Not on this chart, on the daily chart. So JNUG has a good chart. There's the bobble. What's the target? Don't know. I would suspect your first target would be right up here to test this level. Now, the one thing you have to be aware of is there's simple rules of using the moving averages. First of all, we got the T-line crunch that pushed us up through the 50. Then our next thing is sometimes they're going to pull back. So if we start seeing a doji and then they start selling off, it's a good indication they're going to come back and see if the 50 is going to act as support. If it does, then we know we can still be buying, even though your stochastics might be in the overbought area, because we're probably going to do a J-hook off the 50, taking us up to next targets, which might be filling this gap or filling this gap up here. Hold long or still acceptable for entry. You could probably still be buying this one, because what type of pattern do you have? First of all, you have a fry pan bottom, then you have the bobble, which has now created a J-hook, which means this move right here, which was essentially going from, say, 20 to 35, now we could go from 35 to 50, which would be kind of correlating with filling this gap up here. Let's see, I guess it depends which game he has more money riding on. Okay. All right, let's see. RMTI. There's that bobble. So this is what we look for, is when it fails up here and opens lower. First of all, we're in the overbought condition. Now we've got a doji harami. It opens lower the next day at the failing at the 200. What's that tell us to do? Well, that pretty much tells us we want to start taking profits. Where could it move back to? The T-line, the 50, the 20, we don't know where it's going to move back to. But the fact that we can see that it closed on the T-line, then the next day they gapped it up above the previous day's open and started going the opposite direction. What did that tell us about the T-line? Pretty much the T-line was acting as support, that we're in a J-hook pattern, we can be buying again. So I don't mind. I tell people it used to be I wouldn't take profits, because what if this turned right around and headed right back up? Well, now at least I have a format to go work off of. But this is time to tell me to sell. And this is telling me it is time to get back in. I would always hate to get back in, because if I got out of something and I got back in and they turned it right around again, boy, would I look stupid. At least now I know what should happen based upon what type of patterns are occurring at the technical levels. TKMR. This is one where we had the nice pattern. There's that T-line crunch. It broke through. Could you have been buying on this day? Definitely, because it was telling us that the 50 is not acting as resistance anymore. Do we always expect this type of move? Definitely not, but these are the patterns that put you in situations where the probability is that you're in the right place at the right time. TKMR down almost $1 after hours doesn't mean a hill of beans right now. What did this trade today? I would imagine this traded some big volume. After hours, you probably only got less than 1% of what was traded during the day. So we're not interested in what's happening after hours, because that's small volume. We're interested in what the big boys, what the big volume everybody wants to do when the market opens up. Do you wait for it to close above the 200 or just a positive open? Do you wait for it to close above? No, I would have, if this was opening positive, remember, it's going to move in the direction of how they open it after a doji. If it opened positive, where do I think my next target would be? Probably the 200. So this is where, if I was watching this one, this is where I would have been buying, based upon it breaking out on a T-line crunch above the 50, going toward my next target. Would I have been ready to sell here? Definitely not. Stochastics were heading up. So again, this was a setup that puts you in the right place at the right time. What would you look for to enter? Trading positive. More than likely, you're going to be in a 45 degree off of this one. Yes, if you're buying tomorrow, you don't want to see it close back below where it opened today. Okay, 15 million shares. So if there's 20,000 shares trading after hours, it doesn't mean a hill of beans. You want to see what everybody else is thinking when it opens up. Let's see, AGAN. When they gap it up, what do we want to see the next day? That they're still trading positive. A little slow curve. Let's see, I've got messages on these. Oops. And what is that? Oops. I must have been Nugget, and I misspelled it. SSRI. There's a message here that I was going to, oh, look where we are, right here at the breakout level, coming off of this little slow curve. Where's our next anticipated target? Up here at the 200-day moving average. So if we know what the pattern is, at least we know what to expect, or what our high probability should be coming out of that level. What wouldn't that dollar off be deal, presuming, is it going to start at 4? Wouldn't that dollar off be a deal? Presume. Well, we don't know. Remember, we're not basing this on guarantees. We're basing this on probabilities. So I'd still wait to see if it opens positive tomorrow. Well, what's happening here? No. Oh, we didn't, but we've done this one already. So again, we're basing it on the probabilities of what should happen out of the pattern, J-hook pattern, telling us we should be going higher. And this is all a process of learning what the signals and patterns are telling us and what to expect with a high probability coming out of that pattern. There again, there's their slow curve. There's your J-hook pattern on AG. Where's your next likely target? Up here at the 200-day moving average. Oh, this is where Hydro was. This is down here. Skull, there's your J-hook pattern. There's another little J-hook pattern. So crude oil prices still heading up means the short crude fund, or I'm sorry, the other way around. Crude oil prices heading down. The short crude fund is still heading higher. And notice it's gapped up in the overbought area. Doesn't tell us there's a change, but just on safety factor, I have my sell stop right here at today's open. It shouldn't come back down through that level if we're in an uptrend. DRII, kicker signal, J-hook pattern. If we understand what this signal tells us, and we can see what type of pattern it's producing or capable of producing, gives us that much more probabilities of being in the right place at the right time. So this has all the elements that when it broke out, this was wave 1, we're in wave 3. You stay long until you see a sell signal on this one. But this one was setting up nicely because we could see that there was a strong move, a pullback, right smack dab off the 50, then a kicker signal back up above the T line. All you can do with this one right now is stay long until you see a sell signal and a close back below the T line. J-hook pattern. And this is, let's see, did I do this right? This is part of that breakout. Notice you can see the little downtrend. You had the Morningstar signal at the end of a flat trading. This again is part of our observations video that you see flat trading and then a Morningstar signal acts like a mini scoop. You're going to have a slingshot effect to the upside. Strong move to the upside. Now look what we have. A doji gap up. What's that tell us? We're probably still in a, darn, that thing is enough to make you want to kick your grandmother. That we're probably going to be doing a 45-degree off here, the same trajectory as what the original trend was. Oregon up 7. All right. Oh, man. Oh, let's see. And what did I just do there? That was PACB. PBSI. Observe the obvious. Notice where this supported. Right smack dab on the 50. Did a little Morningstar signal. Kind of a little scoop. J-hook. Where do you think your next target is? This could have a big upside potential, meaning back up here, fill in this gap right here to the 200-day moving average. So again, when you can see the patterns, that's going to give you a much higher probability of being in the right place at the right time. And not only in the right place at the right time, but if this market, even if it stays flat, the pattern has a much higher degree of probability that it's going to move and that can complete that pattern. And even if the market was in an uptrend, the patterns are going to move based upon their first price move, which means you're going to get a lot bigger percent return trading off the patterns than you are just in uptrending stocks. FTR, double bottom, uptrending. This one you can be buying on the basis that if they break out through this level, they're going up to the next level, or possibly a wave 3 like we saw here. And notice how this one moved up, J-hook pattern, moved up the next wave. And all right, so the breakouts, are very important to be able to identify. GFI, notice when it broke out through this level, what happened? We were in a very strong price move after that. So we're looking for things that are just at the fringe of breaking out based upon seeing where your resistance level is and seeing what type of candles break through there. Notice the little gap up through this resistance level. Everybody could see there was a resistance level here, but when they gapped up through it, that pretty much told us they had no concern anymore for that resistance level. A new dynamic had come into that price move. Kite was the same way. Broke out through this little slow curve. When it broke out, doji gap up, another strong price move. So these are the things that the reason I keep going over these over and over again is just so that your eyes can become accustomed to when a breakout occurs. Here's HOLX. David L. pointed this one out today. Notice the kicker type signal that took you out through the resistance level. More than likely going to be on a strong trajectory off of here, just like we saw over here. 45 degree coming off of here. Beat. Notice the doji gap up through this resistance level. Probabilities are pretty strong. There's going to be a lot more upside. Scamp. We're right on the breakout area with a doji. It gapped up. Use the T-line again as support if it opens positive. Breaking out into this territory tells us they're going to come back up to this trajectory. Anytime you see a steady uptrend and then a consolidation period, they can move pretty fast to get right back up to the trajectory of the trend and then continue that trend, which means this area right here allows for some very good day trading or very short-term swing trades to get a good percentage move back up to the trend area. Let's see. FEYE. Right at a breakout area. Look at the doji sandwich. Humbug. The doji sandwich right here at the breakout level. And what did it tell us about the resistance level? Told us that was it resisting this area and it wasn't resisting the 200 anymore. There's probably a lot more upside. How are you scanning for these stocks? Most of them will usually set up based upon some sort of signal or pattern in the past. So there, a lot of them will be right on a watch list already, and they're just now completing what you've identified earlier. And I think if you ask Ed C. How to do a scan for any type of pattern, he's got the formula that he'll give you for looking for that pattern. All right, let's see. Silver. Right here at the breakout level, little slow curve broke out. You can be buying this one using the 200 now as a support level. And Ego, notice how it did kind of the bobble. Supported right on the T-line, came up through again. I wouldn't be afraid to be buying this one based upon it could have another 1.5 move to the upside. All right, we're getting down close to the end of the long positions before we start looking at the short positions. This one you want to keep an eye on because there's the resistance level. There's your best friend. If they trade this positive and they get through the 200, there's still a lot more upside. The reason we'd be looking at this seriously is because of that best friend doji gap up. And same scenario here on WBAI. Morningstar signal with the doji gap up. If this comes up through the T-line, at least you know you got to bounce back up to the 200-day moving average. All right, when to sell. anytime you see a gap up in the oversold or overbought condition, start looking to take profits, because just the very simple logic behind candlestick analysis that the Japanese rice traders provided for us is, where do most people buy? They buy exuberantly at the top. So with this gap up in the overbought condition as a doji, what don't you want to see happen tomorrow on this one? You don't want to see them open it lower, number one. Number two, you definitely don't want to see them trade back below the low, because if they do, where do you think they're going to bring it back to? Back to the T-line. So this, a lower open is now time to take profits. So a lot of people are asking about ATEN. And notice what's happened on ATEN. Nice move out of the fry pan bottom. Did somewhat of a doji spinning top in the overbought condition. Where was a very safe place to put your stop? Right here, the previous day's low. Because if it came back down through there, what was that telling us? That there was profit taking going on after they were buying exuberantly at the top. They're probably bringing it back down to the T-line. Now, why is this a safe place to put your stop? Because if there's something good happening, they're going to continue to take it in this direction. If there's profit taking going on, we know where the target will be for the pullback, which is down here. So why take the risk that they're going to stop here? They might come all the way back down here. Close out the position, and the worst case scenario would be they came down, started bringing it back up. You can always buy back in, because at least that way you can see that it was consolidation, and the consolidation was over. Let's see. Might SLW still make a good weekly covered call position tomorrow? We don't know that yet. First of all, our stochastics are still heading up. We've just broken out. We don't know whether it's going to come back and test the 200. It may be now with a breakout still in a very strong run. Oops, I got to take a sip here. Okay. Shouldn't drink that much scotch all at one time. Same scenario on BIDA. BIDA was working out very well, but did a shooting star on Friday, which made this very simple. It gapped up, just climbed in the overbought condition. Safe place to put your stop was 1 penny below the low of Friday. It shouldn't be moving in that direction. When it did, you would have been stopped out. Again, what's the worst case scenario? They brought it back down and started bringing it back up. You could always buy back in. But if there was something good happening that wasn't including profit taking, they should have opened up positive and continued to take positive. This is a very safe place to put your stop. Let's see. BIDA. Oh, and that was the same scenario with ARWR. The fact that they gapped it down and started trading it down, this is a good time to just close out the position. And we talked about that today in the chat room, that when you close out the position, first of all, it's because if this was in an uptrend, it shouldn't be gapping down and going the opposite direction. Number one, that's just simple logic. Unfortunately, the reason that most people hold on to it, which myself would be that case for many, many years, is because I was just hoping that this bad news, they'd kind of dissolve it real quick and start bringing it back up. And I discovered that probably 95% of the time that was the wrong trading strategy. Now I know just close out the position, because that does two things for you. First of all, it gets you out of a trade that's a bad trade. And secondly, it keeps you from getting your mind boggled, sitting there thinking, well, maybe they're going to take it back up, and man, what should I do? They've taken it back up a little bit, and looks like they're throwing it over. Should I get out now, or should I see whether they're going to take it up further? You're spending the rest of the day trying to figure out what to do with this position, instead of closing out this position right away and moving on to something that was going to help offset those losses. And then you can see at the end of the day what to do with this one. is ARWR setting up a belt hold pattern? No, it's setting up a bearish kicker pattern. Tells you more than likely they're going to bring it down at least to the 50, and then you have to see whether it's going to hold that level or not. NBIX. This is what you want to see when you see a gap up and a doji. You want to see that the bulls are still in control, that this profit-taking day right here is over, that you're going to continue the original trajectory. Did you buy the stock using hopium currency? Yes, that's basically what most of us do, is use the hopium, that it's going to move in the right direction because we thought it was, based upon our analysis. All right, so the other side of the coin is that with crude oil prices heading down, we know that at least one sector is still getting beaten up, and that's your drilling companies or your oil-related companies. So something like BTU, you could still be going short. So my biggest problem with candlestick charts is this is so obvious that they're taking these down that if anything's that obvious, you shouldn't be shorting it. And I have to overcome that by going back to the premise that there's still such a minute percentage of all investors out there in the world using candlesticks, that this is going down, and we can see that it's going down. We should be shorting or having a few short positions in your portfolio. Here's another one that we can obviously see that it failed at the 50 again. Ruh-roh. And what did it do? It's done a kicker signal, tried to come back up. Now it's done a doji, gap down, your best friend to the downside. This one you can be shorting with the anticipation, where's your next target? You can see there's a lower trend. They could take this all the way down here. That'd be a 50% return on the downside. Let's see. And these are just a few that I've picked out. There's lots of the petroleum stocks that are in these downtrends that have failed. Now you've got a doji gap down in Anadarko. Where's your next target? You can see where the bottom of the trend channel is, somewhere down in here. All right, things like SRPT failed here at the 50. Left-right combo, closed below the T-line. Now a gap down that took you below this level. Tells us we could still be heading down here much lower. Again, a 40, 60% to the downside. AOS, another one of the oils. Nice slow rollover, doji, doji, doji. Now they've told us which direction they're taking it. Even though we're in the heading toward the oversold area, but that's a fine howdy do. We could be in the oversold area for quite a few weeks from here. And our long-term pick, WLL, is they're throwing the baby out with the bathwater. This one on a short-term trade, you watch to see if they hold this level. But when these, at some point when investor sentiment turns around on the oils, they're going to come roaring back because there's a lot of them that are probably well oversold now. Again, being thrown out with the bathwater, that you want to get ready to look for longer-term buy signals here pretty soon. The bigger the sell signal, DFRG, the higher the probability they're selling them off. So this one, DFRG, probably has more downside. CSLT, failed to hold this level right here, and it did with that. Again, the two methods falling. We're not holding this level. look for a lot more downside. NVGS failed at the 50, part of the downtrend. Little bearish Harami telling that they weren't going up through the T line. Where's your next target? Look for the bottom of the trend channel. Maxwell. Bearish engulfing in this downtrend. Didn't support here at this level. Probably more downside, probably this downward trend channel. And FTK, slow curve, doji sandwich. We're right here at a support level. If they can't hold this, look at this downtrending channel. Another one that you could be down 30 or produce a 30% return from. And SFUN, dark cloud, gap down, same scenario. Look for the bottom of the trend channel as the next target. MRC, slow curve, didn't hold the support level. Another one that could have a big down move, wave 1, wave 2, wave 3. So all this is still kind of demonstrating that even if your market isn't going anywhere with any great magnitude one way or the other, there's still plenty of simple scans to find the good longs and the good shorts during this market move. Okay, so with that, is there any general questions on candlesticks? Very simple on DKS. We should be in a 45 degree. You haven't closed below the T line. I wouldn't want to see it come back. If it came back down through this level, I would suspect it's coming back down to the T line. It might take profits. Have a hard time understanding how to short. Short is nothing more than selling. Remember, to make money in the market, you need to buy low and sell high. It doesn't matter which order you do it in. Now, they've loosened up all the requirements for shorting, which means all you have to do is put in a order saying I am, it's a short sale, meaning I'm selling this position even though I don't own the stock. And what brokerage firms do automatically is they go borrow the stock from somebody else to lend it to your account so you can sell it to somebody else. And when you buy it back, you just give that stock back to whatever account you borrowed it from. So it's selling first and then buying back at a later time. And what you're hoping to do is selling it here and buying it back down here so that you're making a profit. Okay, Jim, with that, let's go ahead and do the double line. I saw somebody. I think the World Cup account is doing all right. It's just really started trading about a week ago. Is anybody getting their results yet? I think we're up about 8 or 10% over the last week. I'm trying to get it set up to where I can see it live every day so I can have a running results. You showed a lot of great charts, long and short. How does one figure out the best of those that are shown? Patterns or just watching in the morning? Looking for the best patterns. Tonight, I will take, there's probably about 30 charts that look good on the long side, probably 30 charts that look good on the downside. What we're trying to do is find the ones that have the highest probability of moving in the right direction, and not only moving in the right direction, but moving with a magnitude that would make it worthwhile. So our recommendation for shorting VDSR is what we call convergence analysis. So as many pieces of evidence that we can put together to tell us this is a good short, One, we know we had a bearish falling method signal and pattern. Two, we know if it traded lower, it was breaking this level and it was continuing this downtrend. And three, where was our next support level? Either down here or down here at the 200-day moving average. That meant about 6 points on a $24 stock. That was a good percent return if everything moved in the right direction. So, and that is things that we want to teach on a constant basis in here is how do you analyze which positions. There's going to be good charts, but there's going to be some charts that say, oh, if this works, we're going to be up 4%. Or this other chart that says if this works, it's going to be up 40%. We're obviously looking to put all those factors into our analysis to see which ones we want to be in at the right time, and or which gives us the biggest upside potential. ATHX, as long as this stays above the T-line, looks like you've got the J-hook pattern coming out of the fry pan bottom. You stay long on this one. Vivus, you get ready to buy this one because if it trades positive after the little doji sandwich above the 50 and breaks out through this level, it makes the next target the 200-day moving average. Denny's, if this opens positive and moves up big, you could have a grand slam. Oh, what a funny guy. At Nubo, you can be buying this one with it breaking out through the 200 and breaking out through kind of the last resistance level. SNSS, stay long on this one, not very exciting, but a good steady eddy. The Russell 2000, also waffling just like the other indexes, pretty much moving sideways. And Disney, it's in a very slow uptrend, not very exciting, but if you like this one, you just stay with it. There's nothing wrong with that chart. PHMD, let's make this a little bit bigger. This one has got a good looking chart setup. You're above the T-line. I'd be more apt to buy it at 205, knowing that it broke through the 50, coming out of this fry pan bottom with a little dimple. And remember, the dimple is you can measure from here to where it showed like a fry pan bottom over here, same distance over here. That's when you should be breaking out to the upside. And Loco had a good chart. Looks like it's doing a little J-hook pattern. Notice when they've pulled it back, it hasn't been very decisive. So you get ready to buy this on the J-hook pattern, meaning your next target would be the 50-day moving average. Whole Foods, all you can do right now is stay long on this one. Not a very exciting stock, but it's a good steady eddy. Blackstone Group had a good chart. Did a doji right here, which means if they open up positive, they're in their next wave, breaking out. Same wave movement as this one right here. See, we did TKMR. This one you buy on positive trading tomorrow. Use today's open as your stop. KN, you stay with, but you definitely want to see this open positive and trade positive. Notice today it came right back down to the 3T line, which tells you you're in a good uptrend until they start. If they start trading it lower, they're going to come back and at least test the T line. Johnson & Johnson, not real exciting either because of an institutional trade. I wouldn't be long or short this one right now. It's moving sideways and there's no real movement to it. Fro, stay long. Notice the wedge breakout here with the gap up. That told you there was a new dynamic in this trade. Now you're getting some big volume up here. You're in the overbought area. I'd put your stop right here on the open. It shouldn't come back down through that level. GGal's in a wedge. I'd be trading something else until you see it break out either to the upside or break down to the downside. And FTR, Nice little scoop type pattern. You can be buying this one, but it's going to get real oomph if it gets up through this level. You have a little kicker type signal today. That tells you you probably want to be looking at this one. And APT, let's take a gander here. See if we can make it even big enough. All right, you got a little left-right combo. I don't know what the volume is on this today. I'd be more inclined to buy it above the 50-day moving average. That would tell you that the fry pan bottom is working. And Apple is at best right now. You can see that it couldn't get up through the 50, which also told you they couldn't get through this downtrending channel. Excuse me. More than likely, you're going to be still in this downtrending channel, which now may mean you're moving sideways until the 200-day moving average is touched. And WFC, you stay short, but see what it does here at the 200-day moving average. Just have to see if it can get through that level. And CRM. CRM, I wouldn't really be short on this one. To me, it's in a sideways mode. There's probably better places to be short at this point with more probabilities of a downside move. SanDisk, stay short on this one if you're short. You did Apple. ACHN, another one that I wouldn't be long or short until it did break out through this level. Now, you do have a doji sandwich potential, so if it does close or trade open higher tomorrow, you can be buying based upon the move being this magnitude, which means you would be up above this level. ARIA, another one that I wouldn't be long or short right now. If you own this one, it needs to open positive and trade positive. If it opens lower, you can see there's no steam to it. Come out of it and go on to something else. Exoma. Another one that needs to see a lot of upside. Right now, there's nothing here to tell you that there's any strong buying going on in this one. IILG. This one you stay long. With the gap up through the resistance level, you stay long until you see a sell signal. IRET. I don't know what the volume is on this one. And on positive trading breaking out through this little level right here, telling you there's more upside. Nordic, stay long. At this point, I probably wouldn't want to see it open and start trading back below this level. That would tell me there's consolidating and coming back to test the T-line. And the reason for that is we're in the overbought area and we're starting to see some selling, so it needed to open positive. NMM, this one you get ready to buy on positive trading tomorrow, telling you that this downtrending channel is not acting as resistance anymore. And CERS needs to open positive. You can see that the 20 right now is acting as support. Not a very good looking chart, but if you own this one or you're planning on owning it, it needs to open positive and you don't want to see it close back below the T-line. AMBA's been acting well ever since this big move. You've got a strong 45 degree coming off of here. All you can do on this one is stay long until you see a sell signal. Corning. Corning, you stay long, but it needs to break out pretty quick. Otherwise, if it keeps lollygagging to the side here, you come out and then you put your buy stop up here waiting for the breakout. And ACRX, another one where you can stay long, coming out of this fry pan bottom with a dimple. Anticipate that the 200-day moving average will be the next target. Let's see, I think we did RMTI. Yeah, the doji sandwich breaking out. Dang, I hate that thing. You can buy this one Just don't let it close back below the halfway point of this candle, because that would tell you they couldn't get out of this this trading range. Gene, you usually can't short in an IRA, but you can buy short funds in an IRA. ATHN, stay short on this one. Look for a possible coming back to test the 200. There's a wee little teeny gap right here. A lot of people say, well, don't prices always come back and fill the gaps? They do, but they might not do it this week, this month, or this year, but they eventually come back, and that's usually a target. CLF, not real exciting here, but you do have a fry pan bottom in progress with a left-right combo. You can be buying this one. I'd just be very cognizant of what it does once it gets to the 200-day moving average. And call. You can be buying this one. You've got a fry pan bottom. I would rather put a buy stop right up here somewhere tomorrow, that if it came up through there, you know it's breaking out. Blocks, just stay long as it can't close below the T line. SUNE. Another one that you could be buying, especially if it opens up above the 200 tomorrow. That'd be a good little breakout setup. CYTK. Another one that I'd probably want to pay $8.15 for, knowing that the J-hook pattern has broken out. If you're long, you stay long. You still use the T-line as your stop. Jern, don't do anything until you see a bullish signal. Now, the bullish signal should occur because it's been waiting for the 50-day moving average to catch up. Another one where I'd put a buy stop, maybe up here at 335. That if it came up through there, that told you they were buying at the 50-day moving average. Oryx, same scenario. I'd rather put a buy stop right now at 605, knowing if it came up through there, you want to be buying because it broke out off the 50. BRX, you stay long on this one. Look for a 45 degree. GILD. Look for a bobble. If this opens lower, it's going to come back and test the 50 or to the T line, then see if it what it does from that level. If it hits the 50 or the T line and bounces back up, you get ready to buy it if it comes back up through the 50. Guild, stay short. It gapped down after a left-right combo, still confirming this downtrending channel. Oh, I'm sorry, that was Schlumberger. Did I do Guild, or did I go right past it? Oh, Guild was the bobble. Guild might come back and test that. Schlumberger was the gap down. And CLRX, that's a nice fry pan bottom breakout. This one more than likely will get up to the 200, so you want to definitely make sure that your volume is good enough on this one. Salt, you can you wouldn't be buying until you see a good breakout from these levels. And Twitter, you stay long as it stays above the T line. You're actually closed right on the 3 T line today. And Facebook, I wouldn't be long or short Facebook. Facebook has a sideways chart. There's really no trend to it. I would be moving my money someplace else at this point. EXK, this one you can be buying, providing your volume is good. A little doji gap up through the 50 tells you there's probably more upside. The 50 is not acting as resistance. We did nugget a couple of times. Nugget, you stay long until you see a sell signal. 7 to 7, yes, all right. And Tazar has run out of steam. It should have been closed out today with it closing below the T line. You can always buy it back on the next bullish signal. Office Depot. Office Depot you should still be out of. If you're short, you stay short. Right now, there's nothing to show there's any reversal. You stay short until you see a close above the T line. HIMX, sideways. It should have been closed out today. Another one that I'd rather buy it at 845, knowing that it broke out to the upside. TDD, retro. TDD, there's nothing here. I'd be trading something else. XONE. This one you can get ready to go short on any weakness tomorrow. CYNO. This one you stay long. Notice the gap up off the 50. This is what we're looking for. Some sort of bullish signal at the 50 when it hits it to see what everybody's decision is at that level. And GXD, stay long. Look for the 200-day moving average. DGXJ. See if I did that right. Stay long. CAVM, J-hook or a scoop type pattern. This one you can get ready to buy, especially on a positive doji sandwich open tomorrow. And MWW, another one I'd rather pay $4.85 for, knowing that it broke out to the upside. ANAC, this one you stay long. ACAD. This one you can be buying. We bought this one today on the positive trading, breaking out into new territory, going into wave 3. Sears Holding. Ooh, nothing exciting at this point. I mean, if you own it, you stay with it. You just have to make sure it can get through the 200-day moving average. Nike. Nike, I wouldn't be long or short. This is in a sideways mode with no direction. KBR, stay short or be ready to go short on this one. That's a good-looking short. Guess. Guess another one that needs to see something strong breaking up through the 50. Nothing here to get excited about either. QIHU. This one I'd be more apt to go short on this kind of slow curve to the downside. QIHU. Yeah, I'd be ready to short this one. Stop on RMIT. I wouldn't want to, my safety stop would be right here at today's open. I wouldn't want to see it close, though, back below the halfway point. And CPXX, here's another one where you've had a gap up. Now you wait to see when the profit taking's over. If I was looking to buy this one, I'd put a buy stop above today's open. If it comes back up through there, we know the profit taking is over. Okay. You mentioned last week that it is a good time to determine where investors are putting their money in sectors. Are staying up, does that mean to focus on these? Yes. Whatever is acting strong right now, that's where the early money or the money coming out early into the markets are going after at this point. That means there's still some buying. You know, whatever they've made their decisions. Right now on live cattle, if it opens lower tomorrow, you can start shorting because that's more than likely they're going to take it down to the 200-day moving average. On lean hogs, you can still short this one. If it opens lower tomorrow, you can short it. You just be aware that you're getting toward the overbought or oversold area, that if it opens lower and starts trading lower, you put a buy stop right here at today's close. It shouldn't come back up through that level. And AMRI. This one you can buy on positive trading tomorrow with a doji sandwich breakout. And New Links. New Links, you can stay long. It's lost some of its oomph. It looked like it was a good J-hook pattern, but it's staying in a good steady uptrend. You stay long on this one. Doug, yes, we record these every night. Jim, our recording guy, will have it available here in a little bit. Only if you have extra time at the end. All right. We'll make extra time. Rare. Just stay long on this J-hook pattern. You're getting up in the overbought area, so very simply, you put your sell stop at today's open. It shouldn't come down through there. And NBS. This is a fry pan bottom. I'd rather pay for it coming up through the 50. That would tell me the fry pan bottom is breaking out for a good upside. Okay. All right, we kept you way past your bedtime. Everybody, we'll see you bright and early tomorrow. Did I miss Tazar? I think I did Tazar. It was just nothing. You didn't want to do anything with this one. You wanted to be out of it. So, all right, everybody. Finish watching the football game. We'll see everybody bright and early tomorrow morning. We'll see you then.